Markets are heading into the North American Open with a powerful extension of the risk-on move driven by a sharp de-escalation in Middle East tensions and a dramatic collapse in oil prices. Fresh headlines pointing to a potential normalization of transit through the Strait of Hormuz are being interpreted as a major turning point, effectively removing a key tail risk that had been driving inflation fears. The result has been a significant repricing across asset classes, with crude oil down sharply and the session and the geopolitical risk premium being rapidly unwound. This is feeding directly into a much weaker US dollar, with selling accelerating as lower oil prices ease inflation expectations and reduce the need for a more aggressive stance from the Federal Reserve. FX is reflecting a clean pro-cyclical rotation, with high beta currencies surging and broad-based US dollar weakness dominating price action. The move is less about idiosyncratic currency stories and more about a wholesale unwind of defensive positioning built up around the energy shock and geopolitical uncertainty. On the rate side, U.S. yields are moving lower as inflation concerns ease and demand for duration picks up, reinforcing the softer dollar dynamic. At the same time, equity markets are responding aggressively, with U.S. equity futures surging to fresh record highs, led by tech, as lower yields and easing macro risks provide a powerful tailwind for valuations. This is a classic cross-asset alignment: lower oil, lower yields, weaker dollar, and stronger equities. The key takeaway is that the markets are rapidly transitioning away from a worst-case geopolitical inflation scenario toward a more constructive macro outlook. That said, the durability of this move will depend on confirmation that shipping flows through Hormuz normalize as expected and that the de-escalation holds. For now, however, the tone is decisively risk-on, with momentum clearly favoring continued upside in equities and downside in the dollar into the U.S. session. One more point of note: the yen has once again surged today on the back of what seems to be another intervention effort on the back of officials in Japan. However, at the same time, the fundamentals there remain questionable for additional yen strength despite these moves, given the broader macro backdrop. That's all for now.